Good morning and welcome to BloombergQuint, India's first digital live streaming business news service. I'm Neeraj Shah and you're watching Indian Open. Let's go straight to the headlines. The cabinet approves strategic stake sale in 5 public sector units. The government will sell its entire stake in BPCL and Shipping Corporation, divest over 30% stake along with management control in Container Corporation and sell THDC and NIPCO to NTPC. The cabinet also announces relief for telecom operators, defers spectrum dues in equal installments over financial years 21 and 22. Finance ministers of Punjab, Kerala, Delhi and West Bengal have appealed to the centre to release the pending compensation for the revenue lost on account of GST. The Essel Group will sell about 16.5% stake in Zee Entertainment through a bulk deal today at a base price of 277 rupees per share. The Reserve Bank of India has superseded the board of Dewan Housing Finance Corporation, will refer the non-bank lender for resolution under the newly introduced insolvency window. There's just a plethora of news in India, and I think that is what will take center stage. But having said that, let's first take a quick check at what the world was doing last night in the US markets and what the Asian screen is looking like today. Not the best, I would say. It's about 0.5% a piece or thereabouts for the US markets lower. And take a look at what Asia is doing, starting off lower. Nikkei down about 1.5%, Hang Seng down about a couple of percentage points. So color in the rest of the Asian screen isn't the most promising. And the SGX Nifty 2 is showing a start which is in the red for now. 11,992. Maybe, just maybe, the set of moves that have come in last night are probably helping the sentiment on India a wee little bit. Now, I think the government action and the fact that government is walking the talk, dishing out a reform after another, might just give a fillip for the indices to break out if the world markets stay positive during the course of the next few days, to break out of this resistance range. We are finding firm resistance at around this 12,000 mark. We've tried a number of times but failed to surpass that. In the scenario of the world markets not looking terrible, and they're looking slightly tough today, but they may not look like that tomorrow. So if the world markets don't buckle down too much, we might just have this fillip that comes in which might help us break out of these resistance range. But irrespective of that, if indeed the Indian markets don't sulk too much today, then you might well have serious activity in PSUs, both PSU normal non-banking names and the PSU banking names as well, a clutch of them having exposure to DHFL, etc. So all of these could be the focal points in the session today. Frankly, what happens to the index today is one thing, but on start, I think a clutch of stocks that will react, and the street will watch out for what kind of reaction comes into some of these names. So first off the bat, the divestment, BPCL, SCI, Concor. Now, great news, yes. You got to keep in mind that the charts are also looking great. There's a lot of open interest position built up in a clutch of these names, including BPCL. But the street knew about this. There are a lot of positions taken in anticipation of this. Is it positive? Yes. Can it be a sell on news? That's the other thing. And maybe it could happen at a slightly higher level. Or maybe there could be some bit of profit booking and the rally continues as well. So it's difficult to figure this out if you're a short-term trader. If you are slightly long-term, then in all of these, there is a case made for there being some positivity. But just be mindful if you're a short-term trader, it's difficult to quite time what could happen in the session today to some of these PSUs. And frankly, as a result of that, a clutch of other PSU names could be active as well. Then the big newsmakers that have come in. Firstly, I mean, since the government, we are talking about the government action, the deferment of the spectrum payment could well have some bit of further positivity for some of the telcos. So Bharti Airtel and Vodafone Idea could be interesting ones in the session today. The big important one from a stock movement perspective would be the Essel Group's decision for the promoters to offload about 16.5% stake. Do watch out for Zee Entertainment and the allied names, and we'll talk about them on first up. And the RBI superseded the board of DHFL. Not that DHFL as a stock really materially changes. I mean, even if it does, I don't know how many people associated out there. But a clutch of banks which have exposure to DHFL could be interesting ones to monitor in the session today. And I'll talk about a bit of that on first word as well. So these are net some of the names that you should monitor in the session today. But without much ado, let's cut to the chase and try and talk about each of these. On first word today, Yatin Johnson to talk about the Essel Group's plan to sell another 16.5% stake in Zee Entertainment. Ira takes us through RBI's move to supersede DHFL board. Nikunj Johri runs us through the cabinet's decision on strategic stake sale and a breather for the telcos. DIPAM Secretary Tuhin Kanta Pandey explains how the government plans to go about selling the controlling stake in some of these 5 companies. And lastly, Sajid sums up the decisions taken by the SEBI board. The big important stock mover of the day could well be this group. Subhash Chandra and his family will bring down their stake in Zee Entertainment to just about 5%. Essel Group will sell approximately 16.5% stake in the group's flagship firm. Yatin Vota now joins us for more on this. Yatin, the release mentions that a Chinese fund is looking to buy little more than 2% stake in a company. What about the remaining 14%? And what do you reckon would be the street's reaction or verdict to likely the overhang going away now?
Yeah, so Neeraj, first thing first, the official exchange, by the Essel Group promoters do indicate that 16.5% is what they intend to sell in the open market. More importantly, post the transaction, the group plans to hold 5% stake. So basically, the promoters will continue to enjoy a 5% stake post the transaction. More importantly, as you were mentioning earlier, the Chinese fund, which is OFI Global, they are intending to buy a 2.3% stake in Zee, and more importantly, they already hold a 8.7% stake, essentially meaning that post the deal, again, OFI Global China Fund LLC would be holding close to 11%. Now, what we gather from reliable sources is that today, most likely there will be a block deal which could happen in Zee for the entire 16.5% stake, and the promoters are looking to sell 15 crore shares. And the base price for the offer has been, placed at 277 rupees per share, implying a 10% discount to yesterday's closing price. More importantly, you should not get carried away by the base price of 277, since it's a book building process. The price can be anywhere between 277 to the current market price of 300, 305. So it really depends on the demand supply situation. Yesterday, the shares closed at the day's high, indicating that there is sufficient demand even at current levels. If you look at the shareholding pattern post the deal, as I mentioned earlier, the promoters will be holding 5%. We have Invesco Oppenheimer holding close to 19%. OFI China post the deal will be 11%, and obviously Vanguard and mutual funds put together would be another 15%. So more or less, large amount of institutional investors as far as post Zee promoters selling stake is concerned. And if you look at the brokerages today morning, we had 2 big brokerages voices coming in. Morgan Stanley has upgraded the stock of Zee. They have placed a target price of 340 rupees. Essentially, they are indicating in the report that the pledge overhang has gone. CLS also has a buy on the shares of Zee. They already had a buy. They have increased the target price, however, to a level of 390 versus the previous target price of 320. So clearly, CLSA believes now that the near end of the pledge crisis is behind us. Probably that requires a target price hike. In terms of risk, of course, the low promoter holding as well as the scrutiny of cash flow is something important they'll be watching out for. Of course, cash flows, meaning they had a lot of these promoter entities and intercorporate loans as well as dues from companies like Dish TV, which were a cause of concern in the last quarterly earnings. Let's see whether or not they are able to recover money and really turn that operation around.
So, Yatin, in your conversations with experts or marketmen, is anybody talking about how the future of Zee Entertainment could be like now that the promoters have lesser skin in the game? This is arguably for the first time that such a large media conglomerate would have promoters in a minority role, at least in terms of shareholding. Yeah, so
Neeraj, earlier, the promoters always maintained that they want to sell half of their shareholding, but unfortunately, they were not able to do that. Now, the talk on the street is that the pledge crisis is out, the promoters will be selling everything. But yes, Zee clearly becomes, a takeover target. These were the events which we saw in companies like United Spirits, recently in Fortis, wherein the promoters had, minimal role to play, minimum stake at, the company. And then, the entire board process or the, sale process was run. IHH, of course, is in trouble because of the Supreme Court ruling. But if the asset is good, I think suitors will come. And more importantly, with a 5% stake, I don't think so. The promoters can now, have a substantial say in the company. Probably if the institutional investor decide, if a buyer decides to, really take over the company, I think a lot of options open up for the minority shareholders.
Actually, Sudeep was saying this yesterday as well in a conversation that we did, that these financial investors have come in for money. I mean, if they get a good buyer at some point of time, 1 year, 1.5 years down the line, then a transaction may well happen.
Yeah, and more importantly, Neeraj, if you look at the share price, it is almost 15 times, forward earnings, according to one of the brokerage reports I was, reading. Valuation quite cheap. I don't know if the current cost model is applicable when a new buyer comes in, because the brokerages have been of the view that the Essel Group has been able to manage costs well at Zee historically versus the peer set. I don't know how really the cost chain moves.
That's a point.
But 15 times, I think in a market like India, you will have a lot of buyers domestically as well as internationally.
It's not expensive for sure. The question is, can the going concern over the next 1 year display some of the metal that the company is always displayed under the Essel Group promoters? Yatin, thanks so much for putting that into perspective. That's arguably one of the most important stocks of the day. The other big decision that came out last evening was Reserve Bank of India's decision to take control of Dewan Housing Finance Board. The regulator will use the recently announced provision under the Insolvency and Bankruptcy Code for the resolution of the non-bank lender. Ida explains how this will play out in this report.
The Reserve Bank of India has finally stepped into the complex process of resolution of financial services firms. On Wednesday, the RBI said that it has decided to supersede the board of Dewan Housing Finance Limited. As you know, DHFL has been in default since June, and concerns about governance and other aspects of the firm have been swirling around since about January. This is what the RBI said. It said that it is exercising the powers that have been given to it under the RBI Act of 1934, and in the exercise of those powers, they have decided to supersede the board of Dewan Housing Finance Limited owing to governance concerns and the defaults by DHFL in meeting various payment obligations. The Reserve Bank of India went on to say that they have appointed an administrator. A former banker has been appointed as the administrator from DHFL. They will now be referring DHFL for resolution under the newly introduced window for financial services firms under the IBC. Just pause here for a minute, because I do want to mention that there are two major regulatory changes that have taken place to allow this to happen. Until the start of the year, the RBI actually did not have the powers to supersede the board of an NBFC. Also, the regulator for housing finance companies, which is what DHFL is, was the National Housing Bank. Now, in the budget of July, after the government was re-elected, they made two significant changes. One, they gave RBI powers to supersede the boards of NBFCs, and they brought regulation of HFCs under the RBI. So that prepared the RBI to take an action of this nature, which it can take in the course of banks. But then the question was that if you do that, how do you go about the resolution process? We don't have an FRDI bill, a financial resolution bill. So finally, earlier this week, the government put out rules and opened a special window under the IBC through which financial services providers will be resolved or can be resolved, non-bank financial services providers. Now, what is that process going to look like? The administrator who's been appointed will have pretty much the same powers as a resolution professional does under the IBC. The RBI is also likely, or can at least, appoint an advisory committee. This advisory committee, from what we understand, can be part outsiders, but also may include one insider so that they know the functioning of the firm and they can continue with it. There would be a moratorium which kicks in and commences on the date of initiation of the resolution process. Unlike in the case of other firms where it has to be admitted for insolvency, here the moratorium kicks in immediately. The provisions of the moratorium will not apply to any third-party assets or properties. We believe this should extend to securitized assets as well, but we'll see. This is the first case, so it's a test case. The license of the financial institution does not get suspended, so it can continue functioning to the extent that it has the wherewithal to function. So in this case, it can keep collecting from retail clients and can keep making payments on, say, securitized assets, etc. The administrator will eventually go back to the RBI to get a no objection once a resolution plan is approved. Now, that resolution plan will be approved via the main creditors of the DHFL in this case, or any other financial services company. They will approve a plan, they will take it to the RBI. The RBI will say we have no objection, and then perhaps it can proceed. As part of that resolution plan, they also may try and bring in a large shareholder who then takes control of the firm. Now, we don't know what that resolution process will look like, but as BloombergQuint has reported over the last few months, there were a couple of proposals doing the rounds. One of them was to split the debt of DHFL, which is about 85,000 odd crore, into sustainable, which is largely the retail assets, and unsustainable, which is largely the developer loans. The retail assets perhaps can be mapped to retail liabilities, and that part can be a good bank which sort of continues. The bad bank would have to be restructured. The developer loans can be restructured. If you look at the next point, you will see that there would be some restructuring, some conversion of debt into equity, and then perhaps bringing in of a new shareholder. That would be part of the process as well. There is one complication here, which is the retail depositors. Remember, DHFL is a deposit-taking NBFC, so they have retail deposits. And from what we understand, the regulator is keen that a resolution plan accounts and makes provisions for retail depositors being paid on maturity. So that will be important to watch for those who have retail deposits with DHFL. But it's an important move. It tells you the regulator now has some level of control on non-bank lenders who may be falling into trouble. DHFL is one. Other NBFCs, or HFCs, we don't know whether the RBI will choose to take similar action, but they have the option to take this action, is what we now know.
Yeah, it's one of its kind decision. The key thing to note also as well, how the market reacts to some of these news, not necessarily on DHFL, but DHFL's exposure to some of the PSU banks, or the exposure that across major accounts that some of these banks have. I think in DHFL, as per a brokerage note, BOB, SBI are amongst the names that have high exposure. Should be monitored at the session today. Okay, the other big news is the cabinet decision approving the divestment roadmap last evening that will see the government sell its majority stake in 5 public sector companies. This comes at a time when the centre is struggling to fund the corporate tax cuts and balance its fiscal account. In turn, the government has decided to provide some relief to the cash-strapped telcos. Nikunjori reports.
The Union Cabinet has approved strategic stake sale in 5 public sector companies, where it has decided to let go of the management control and has decided to sell majority of its stake that the government currently holds in these companies. The first on the list is Bharat Petroleum Corporation, where the government will sell its entire 53% stake and give away the management control that the government currently enjoys. The catch here, the caveat here is that the government will not sell the 64% stake, 62% stake that BPCL currently holds in Numaligarh Refinery, and Numaligarh Refinery will be transferred to another oil public sector company. The other company on the list is Shipping Corporation of India, where the government is selling its entire 64% stake to a private buyer, and along with the transfer of management control. The third company is Concor Container Corporation of India, where the government will sell its 31% stake out of the 55% stake that it currently holds in the company, and at the same time transfer the management control to the private buyer. The remaining 2 companies, Tehri Hydro Development Corporation and NEEPCO, will be sold to another public sector company, which is NTPC. Besides this, the government has also given its in-principle approval to divest the government's direct holding in select PSUs below 51%. This decision has been taken because the government could not come up with another tranche of ETF, since the companies that were part of the ETF had hit the 51% threshold, and the government had to take this approval to divest its stake below, divest its direct stakeholding in these companies below 51%. So now the government can go ahead with ETFs and divest stake in some of these companies like IOC, BMEL and MOIL below 51%. Lastly, the government has given a big relief to the telecom sector. It has decided to defer the spectrum payments of telecom companies for the year 2020, 2021 and 2021 to 2022. The deferred amount for these spectrum payments will be equally spread over remaining installment that these telecom companies will have to pay to the government.
In fact, Nikunj also spoke to Divestment Secretary Tuhin Kanta Pandey, where he explains the rationale for not divesting BPCL's Numaligarh refinery and for the government retaining the 24% stake in Concor. Listen in.
The strategic disinvestment to a private buyer will take place, but for Numaligarh, this carve-out has been there, as Honorable Finance Minister explained, that this will be carve-out and it will remain with another public sector buyer. So the sale will be made to another CPSC in oil and gas sector.
Okay, so will this mean that the government will divest Numaligarh refinery and get proceeds, divestment proceeds from that as well when it sells its stake to another CPSC?
Well, so far as the Numaligarh refinery is concerned, it is a BPCL subsidiary.
Okay.
Government does not have direct equity in it.
Okay, and sir, you've taken a decision to continue holding about 24% in Concor. What was the reason for that? Why not privatize it completely?
The Concor 24% is less than 26%, but the reasons for retention of the stake is on account of the fact that the Concor is Concor's operations are integrally linked to the railways so far, the way it has developed, and the competitive market will take some time to come of age in that sector. So the government has decided.
Will the strategic disinvestment be open for foreign buyers as well for all these 5 companies, except NEEPCO and THDC?
Well, there is no such restriction. It will be based on the expression of interest.
Okay. So another important decision has been to lower stakes in select PSUs below 51%, at the same time retaining management control. So what would be the way forward? This would be decided on a case-to-case basis. How would it be approved later, and how would you take a call whether to lower stake in each of these PSUs?
This will be, each case will be examined on its own merit, and it will be taken to the cabinet for approval.
Okay,
for approval.
Okay, my last question. So how hopeful are you of meeting your disinvestment target? By when do you see all these strategic disinvestments especially getting approved and the sale getting through?
We are doing our best, and strategic disinvestment is only one of the modes of disinvestment. We have other modes of disinvestment where a lot of shareholding we pass on to the public, and we increase the float and for the retail investors.
And of course, remember, in addition to that, what the government has announced with regards to the telcos is the other very, very big important thing. So the government announced 2 things. One was divestment that we spoke about, and 2, the spectrum fees deferment. And for Bharti, for Vodafone, as well as for Jio, I think Reliance Industries, for all 3 of them, the cash flow situation improving significantly is a big thing. And for Jio, because of no AGR that they have to pay, I think this materially benefits them. So Reliance Industries has been on a bit of a roll. Let's wait and watch if there is more in store. So a clutch of these names that you got to monitor in the session today. The last piece on First Word is about the market regulator's action. It approved new rules for portfolio managers on Wednesday. SEBI has also cut the time frame for rights issues drastically. And what's also taken some by surprise is the regulator's mandate that listed entities have to declare any default within 31 days of doing so. Sajid Pangat's here to tell us more about it. I thought, Sajid, that was anyways in the works, so it might not be a big surprise, but now they reaffirmed that 31 days. But beyond that, or 30 days plus 24 hours, but beyond that, a clutch of other moves.
Yeah, that's right. If you look at the rights issue thing, 31 days was something expected because the working group also recommended, and SEBI also has this window of reducing it by further 7 days or so, because the Companies Act requires 14 days of issuance period for any rights issue. So if that gets amended, then SEBI has much more leeway to bring it down further. So, as of now, it's T plus 31 once approval comes in from the regulator, and then 31 days, so it can come down to as small as 3 weeks. That's what the regulator said. But the bigger thing is the allowing rights entitlement to be traded on the stock exchanges, because currently what we see is there's an off-market trading that happens for rights entitlement. Now that will be brought in on the platform of stock exchanges. Now it would also mean that better pricing of rights, and also for minority investors who are now, not participating in the rights, at least now be able to sell it on the exchange and get some money of it. So it's a very good move in expanding the product profile which is available on the stock exchange platform there. The other thing is the portfolio managers regulations. There have been huge changes there, especially with respect to starting from the net worth being increased to 2 to 5 years, but they've been given 3 years to meet that net worth. But the bigger one would be the threshold being increased to 50 lakhs. Now, that would mean that anyone now going for a new investment into into the portfolio manager will have to ensure that he puts a minimum of 50 lakhs, or if he's already won, then any top up should ensure that it goes above 50 lakhs. So it's not a 5 increment about 25, which normally people used to do. If you have 25 lakhs, then you have to bring in another 25 lakhs. Otherwise, otherwise it gets grandfathered at what it is at this point in time.
No, so sorry. So you're saying existing people who have got an investment of 25 lakh rupees, that doesn't get disturbed?
That doesn't get disturbed.
New investments.
But if they're going to do a top up, it has to be 25 lakhs. It cannot be 5 lakhs.
It can't be 5 lakhs. Okay.
So they have to go beyond the 50 lakh threshold to ensure that they meet the SEBI regulation there. So that has been grandfathered. But the bigger one would be capping of operational expenses at 4.5%, which is part of the working group. But it will bring in much more structure and some more restrictions for the portfolio managers, especially with respect to disclosures, with respect to returns. Now, what was happening is that the brochure had some return, the regulator was getting some return, and on a monthly or periodic basis, clients were getting some other return. That has been streamlined, and now they will have to have a common profile or standard format for those returns based on time weighted rate of return, which they will be providing there. Bigger thing, direct window for portfolio managers. Currently, if you speak to the industry, at least 80% of them come through distributors. And a distribution fee is a very high fee because they take upfront fees, and that entire upfront fee goes as distribution fee for many portfolio managers. Now, so now they are allowing a direct window for PMs should have a direct window of their own, so that there is no distribution fee which comes in. So, so advisory fees comes in, but distribution fee may be hit for many of them,
right.
And the distributors will have to be certified by a SEBI registered course and be part of the AMFI registration. So all those restrictions are bringing in tighter, and the next step would be the alternate investment funds, because the working group is now working on that to bring in more transparency there, because there isn't much. And finally, the default part of it. For listed debt securities continues to be 2 days, but for default with a financial institution like a bank, they have given 30 days to notify. So while some would say that it's a relaxation from 2 to 30 days, but banks never had that 30-day period or any period of disclosure. So this becomes some bit of regulatory hurdle for many of the entities who were not earlier disclosing it to the exchanges or to the shareholders.
But it's great for shareholders. I don't know if bank provisioning moves up as a result of this on a quarter-on-quarter basis. I think that's
so the reason why it was not been done, because there was no tri-party agreement between this credit rating agency, the bank and the client. Because it was confidential information between bank and client, credit rating agencies never used to get this information. Now they will be given this information at the end of 30 days if there is a default.
Okay, Sajid, thanks so much for putting that into perspective. That's all that we have on First Word today, though. We'll take forward the conversation on Zee and DHFL and more, and the divestment drive, more importantly, with Nilesh Shah of Kotak Asset Management later on in Indian Open. Talk about the government strategic divestment with former chairman of Shipping Corporation of India, S. Hazra, as well. But after this break, a full tilt towards the day's trade.